Back with First Trades right here on ET Now. Let me now welcome on board Akash Agarwal, the whole-time director at V2 Retail, joining in on the show right now to talk about how their business has been. Akash, great to have you today on ET Now. Last time we were chatting with you, you had talked about hiking the guidance to about 100 stores at the start of FY26 to now 130, with the next year target raised from 120 to 150. What gives you this kind of confidence to accelerate store expansion so aggressively? And what are the early trends that you're seeing from the new stores?
Yeah, hi. Thanks for having me. So, if you saw the first two quarters, we saw a very strong demand and a very strong performance across geographies. And old stores grew at a healthy 11-12% SSSG. And new stores were already breaking even from the first month itself and giving a very strong performance, well within the benchmarks that we have set. So, that's why we have already opened 86 stores this year. The initial plan was to open 100, and now we've increased that to 130. And next year's store opening guidance also, we have increased to 150 stores.
Right. Akash, hi, good morning. This is Harsha. Where, in terms of geography, states, are the new stores going to get targeted? Is there a disproportionate focus on other states, which give us a sense of which geographies you're targeting with this kind of store expansion?
So we have entered 5 new states this year. So we have entered Andhra Pradesh, Gujarat, Rajasthan, Punjab, and Maharashtra. And we've got a very good, robust demand in all these geographies. And our decision on expansion is completely based on the data and the performance of each region. So to give you an example, Karnataka was a relatively newer region for us. And now we have 18 stores there because it has become one of the core strong regions for us. So similarly, whatever regions we collect the data, we optimize our business model and our assortment model according to the tastes of that particular region. And then when we feel that the performance is strong enough, then we go for further expansion in that particular region. So about 60 to 70% of our new stores should come in existing core geographies, and 30 to 40% should come from newer regions, which will become future core markets for us.
Tell me, what's the pulse around the festive season? How is the Bihar market performing, and post-elections as well? And what makes it such a strong driver for your expansion strategy?
So winter is a very big season for us, and early onset of winter has really helped getting that demand early into the season. So hopefully this momentum continues to throughout December as well. But the early signs are very positive, and because of lower temperatures, people are flocking to our stores to buy a new jacket or a new sweater, and winter has a better margin and a better ASP. So hopefully that converts to a very strong quarter.
Akash, you've done a 400 crore raise. Uh, am I right in understanding that a large part of that will go in the expansion strategy that you've just spoken to us about? And what funds will you have left post this expansion, or this accelerated expansion, if I can call it?
Yes, so we raised 400 crores. So there were two major objectives behind it. One was to accelerate the store opening plan, and the second was to become even better paymasters for our vendors. They all need help in working capital. So we always give them a facility for bill discounting so they can get their bills paid to them uh, right after like 7 days of GRC also, whereas average credit term is 45 to 50 days. So that really helps them with their business operations. And of course, I think looking at the store expansion now, we are well covered for the next 2 years of store expansion with this fundraise.
And Akash, uh, you've done 12% margin this time around. That's a far cry higher from what you've traditionally done. What's changed, at least on the margin count?
So the biggest change has been the per square feet sale. So
Right.
in the last 2.5 years, we've moved from 650 rupees per square feet to almost more than 1,000 rupees. And our older stores are doing more than 1,100 rupees per square feet of sale. And there has been a slight increase in the gross margin also due to better full price sales and a better product mix.
And give us a sense, does your SSSG growth creep up as a result of everything that's playing out, say, for example, in Bihar as a geography? And thereafter, this trend playing out in other states as well, right? So do you believe that that gives a lift to SSSG, at least in the short term, if not in the medium term?
So yeah, we get an SSSG in Bihar and all the regions. But best thing about this SSSG is we've seen it throughout geographies. So it's not that it is skewed because of a particular geography or two states. So it's because of the assortment planning and all the effort that we put in upgrading our product and reducing our gross margins. So the price point at which the customer is getting the product and the kind of products that the customer are getting, uh, it's all word of mouth marketing. So in fact, we've reduced our marketing spend from almost 1.2, 1.3% to just 0.5% now. And still we've been able to grow at the rate of growth that we've seen in the last 2 years. So I think it's the focus on product. It's never ending pursuit of, giving a better assortment to our customers and also leveraging a lot of data. So almost 60 to 70% of our assortment is designed through data insights. So if the data tells us that cream color is doing better than a yellow, we give more options of cream and so on.
And so, Akash, how do I look at the business going forward? You know, a year back, you were at 200 stores. You're currently at 285. You're driving store count by another 50% next year. SSSG growing at 8 to 10% with some positive upside is what I read through. No debt on the business, 20% plus on ROEs, and 8% margin, even though you've done roughly 12%. Uh, uh, is this the kind of clip we can expect maybe for the next 2 years, 3 years, 4 years? What's the visibility?
So the visibility in terms of number of stores, the number that we look at is about 2,000 to 2,500 stores. That's the capacity of the number of V2 stores that we can have in India. So I think the only limiter there is our own execution strategy and our execution strength. So if you're able to, continue with this self-improvement, if you're able to continue with the amazing execution and the performance and the profitability that we've seen, then we should be able to grow at least 50% every year in terms of revenue growth. And yeah, that will,
That like?
be 8 to
Akash,
10% on the, yeah.
sorry to interrupt. What's the runway for that like? 2 years, 3 years, 4 years?
Again, it completely depends on our performance. If we
Sure.
keep performing well, then we would add 50 to 60% new area every year. Because if we are getting, a good response in all the newer stores, if they're breaking even from the first month itself, then it makes sense for us to expand our retail footprint because there is still a big vacuum in this space that we operate in, and especially in tier 2, tier 3 towns. And wherever we have entered, the customers are giving us very good feedback, and we would want to cater to as many customers as possible.
Okay, so non-committal on that count, but thanks so much for coming in and speaking with us. Absolute pleasure.